All right, we are back for another Friday financial wrap up with Mr. Michael Zuber. How are you, Michael?
I'm doing well, man. I think you and I need to change it up a little bit. It's been kind of a slow week. So I thought maybe you and I could just riff on, looking back at 2023 and maybe look ahead to 2024. So that's what I was thinking we do today.
Absolutely. So this is for December the 29th,
Wow.
2023. Wild, right? Where it's Happy New Year, right? New Year's weekend.
Yeah.
What surprised you most about 2023? What stands out to you as the most surprising thing?
I think the thing I got most wrong was I thought 2023 we would have a recession, and not even close. Not even close to a recession in 2023. I certainly got that one wrong.
Yeah. I would agree with you, but I think the thing that shocked me or surprised me most was the banks. Silicon Valley. I think when the banks started failing,
Yeah, good point.
and you and I had talked a lot about 1980s, and we were already kind of in that mindset of Back to the Future and the 70s
Yeah.
and 80s. And I almost like, oh, is this the SNL crisis, all over again?
Yes.
So it
Yes.
kind of felt like that. And then even not that I thought we were in 2008, but the whole liquidity thing and how, 2008, they had to do TARP funds and
Yeah,
all of
you're
that.
right.
It felt a little eerie like that. It definitely hit some PTSD for me.
I am so glad you brought that up because my recession call happened the Saturday after SVB. I was like, this is different. People are going to take their money out of the bank. They're going to put it under their mattress. They're going to stop shopping. I mean, that was my call. And it worked for a little while. And then the Fed came in with this bank term funding thing, and all these 10-year notes were now traded at par. People go from insolvent to solvent. And I think we had like what, I don't know, 10, 12 banks go out. I thought we'd have 100. So great catch. I mean, that could have been so much worse.
And nationwide, there's about 5,000 banks, right? Is that
Yeah, I think it's like 5,800 or something. Yeah, something like that. Yeah.
okay? And I'm only going off of memory off show from when
Yeah.
we talked about the show, when that was all current. The interesting thing about the recession too is that I actually moved into one of my rental properties, getting into, and even still now, into a dry powder situation because I
Mm,
thought same thing, recession, that I was
yeah.
going to buy kind of the forever, and still even now in that kind of
Yeah.
mindset of buying a forever home. And
Smart.
it's interesting to see if we look ahead,
Yeah.
are we going to have a recession?
So I'm still calling one. I like to stay by my calls as long as possible because I don't like to be seen as flip flopping. I'm calling Q1, Q2.
Okay.
And I honestly don't feel great about that call. I don't feel great. But yeah, I'm going to call a small and shallow recession Q1, Q2 just to stay authentic with the audience. Yeah.
Okay. So also too, it feels like about a year ago, something you said in the show. It was like a survey on CNBC. It was like 83% of all the CEOs
Yeah.
said we would be in a recession for 2023.
Good memory. Yeah.
Now we're going into 2024. I feel like that survey kind of dropped, or what's the talk on
I think
CNBC and
the
Wall Street?
Yeah, I think CEOs generally, again, the same survey leans negative. I believe it's once a quarter. But to your point, I think it's in the low 70s now. So it's not the high 80s, it's the low 70s.
Yeah.
Um, yeah, but they still lean negative.
Okay. And I know I'm going backward,
No, it's
forward,
fine.
but
It's
it's
all good.
going with the topics. What else surprised you, or maybe just what was most interesting? Also, other interesting points of 2023 regarding real estate.
I think 2023 will go down and put to rest the whole if transaction crashes, prices have to crash. That's not how supply and demand works, but there are endless amounts of people that have said um, transactions crashing to 3.8 means prices have to crash. And I've tried to tell people for years that's not how it works. Um, I think we've hit the bottom at 3.79 annualized for, I think it was October.
Yep.
Um, I'm not calling for any big run up from here. But you gotta hit bottom before you can grow. So yeah, I think prices will end the year up 3-4%, while transactions, bottom down about 50%. So Yeah.
There was no surprise there. Only for me, that wasn't shocking. It was confirmed only because, again, you had been talking about this. We had been talking about it on the show for. I always felt like we were 3 to 6 months ahead, and even
Yeah.
maybe in 22, I almost felt like we were maybe. It seemed as though some of the stuff was so early that it
Mhm.
seemed like, wow, there's no way, kind of thing.
Yeah.
But
Yeah. I think
interesting.
the other thing to talk about, we'd be remiss if we didn't, was the wild swings in interest rates. The
Wow.
interest rates are looking, it's not supposed to be that way. The interest rates are supposed to move much, much slower. And we have seen, wild and crazy swings. I mean, just this week on Wednesday, the 10-year note was down 10 basis points. That's not normal. And we saw rates run up to over 8. They're now, let's call it 6.5. I was talking with a mortgage broker today who quoted an FHA loan. I'm going to have you guess the rate. FHA, 20% down, 780 credit score. The seller kicked in 2.5 points to buy the rate down. What do you think they got for a 30-year fixed rate loan?
Only because the way you set it up, I know that it's going to be probably something with a 5 on it. 5.75, 5.85 is my guess.
4.875.
Wow.
4.
Wow. That's
Wow.
crazy.
That's
Yeah.
nuts.
It,
That's freaking nuts.
well, what's interesting though is because that to me tells me the price sheet from the mortgage origination companies, they're hedging that money is going quickly down on an escalator down, and that basically they'll take those 2.5 or those points up front.
Yep.
So wow, wild.
4. And
Yeah.
again, I really, if we talk about 2024, the one thing, if I had a magic wand, I would have rates on the 30-year, the one that's published weekly by Mortgage Business Daily or whatever it is. I hope we're in the low 6s.
Yep.
I do not want us 5.5, 5.25, 5. That would just be ungood for the housing market. It would set up a problem.
We've talked about this a lot, but let's unpack it a little bit too. Just let's play with it.
Yeah.
So if rates by February or March are 5.85, 5.99, 5.75, somewhere in the springtime,
Yeah.
then let me ask you, we talked about 2024 being a flat market in terms of
Yep.
appreciation,
Mhm.
maybe 2, 3, 4%, which is,
Yeah.
again, we would
It's
consider that
low
flat.
single digits. Yeah. Yeah.
If those rates drop down in the early spring, mid spring to 5 point something, do
Yeah.
you think we get into this year where all of a sudden maybe we get 10 or 15 or 20% appreciation below the
Oh,
median? Below the median.
uh, I could see 10. I would I would hope not. I mean, I hope not 10, but really hope not 20, because ultimately what happens is if we get another year of 10, 12, 14%, this thing gets unaffordable for everyone. We get renter nation. We get, the divide between the haves and the have-nots just gets so wide as it's hard to break through. I own a fair amount of real estate, and I do not want to see 10% plus appreciation in 2024. I know where that ends up, and it's not in a good place. I'll take 0 before I would take 10 in 2024.
Yeah. Is it possible? 10%?
Oh, yeah, it's absolutely possible.
Very possible, right? If we get into the low, if we're at five
Dude,
and a quarter,
you get a 4 handle, game over.
yeah,
Game over.
yeah, and that's
Yeah.
what if rates end up at 4.95 or 5.25 by
Yeah.
summer,
Yeah.
potentially we're going to be again low inventory. Is it enough to unlock inventory?
So that is a very, very, very important question. I do not think inventory unlocks at 6 meaningfully. 5.5, a little bit. Sub 5, yes. Sub 5,
Okay,
yes.
okay, very interesting. 2024 Probably going to be a pretty wild ride again, man. It sounds to me like we better have a seatbelt. Yeah.
The next 90 days. It to me, it's about January, February, and March.
Okay.
Where are rates? Where are inventory? I am really afraid that the spring selling season started December 15th
Yep.
and we only gain momentum from here. I have a legit, to my core, fear that momentum just goes gangbuster in the next 90 days. It's a real fear.
I would agree wholeheartedly with you. And again, inventory's tight. And I think that's the biggest thing is with the low inventory, um, if the rates come down too quick, it's really going to crush people. It's really, and specifically the middle class, the
Exactly.
affordable, the middle class. It's not
Exactly.
people with money can still, they're buying or selling or doing whatever they want anyway.
Yeah, yeah, exactly. It's the middle class. I'm a guy who pulled his bootstraps up, was raised when money was a stressor, and I think getting on the property ladder is the best way to build wealth. And I don't want to see that go away.
Yep.
And if we have another 20% run up in a single year, the people that own stuff will be wildly happy. But we will crush a generation. We'll just crush them. It's not okay. I hope it doesn't happen.
Let's talk about, okay, so market crash, the crash bros.
Mhm.
Right? Obviously, they were completely wrong in 2023. There was no market crash. You called it back in 22. It was a crash in transactions.
Correct.
I don't think anybody ever really picked up on that as a headline, maybe a little bit, but not really. Nobody ever really kind of understood that. I think the one real at a time community does,
Mhm.
but most people didn't really understand that. Let's go forward into 2024. We know that there's not going to be a crash in single family, but let's talk about the multifamily in the
Ooh.
commercial space. What do you see happening in 24 with commercial?
I'm glad you brought it up and framed it that way. I don't know if you've seen this, but Grant Cardone is out talking about the greatest real estate crash of his lifetime. And he's very clear, not single family home. It's going to be multifamily office. And I agree. I do say it's a late 24, maybe 25 opportunity, but you got to get ready now. There will be opportunity. I have shared with folks a year ago, probably 18 months ago, with one of my weekly experts who does multifamily, right? He is a syndicator. We turned $100 million property into sub 50 million with little changes. And we're seeing it right now. So we got it right. We called it right. And there's a lot of LPs that are going to get hurt. A lot of GPs are going to lose it all. And that means where there's opportunity, right? Where there's great pain, there's great opportunity. And I think Grant Cardone is right. The great opportunity in late 24 and 2025 is going to be multifamily and office. And I'm getting ready. I've told people for a year, what am I doing? I'm buying residential so that I could 1031 into multifamily when I find deals. If you guys take the time to read this amazing book, you will find that I took 8 houses and flipped them or 1031 into 80 units. I'm trying to find the page. Yeah, it's on page, I don't know, page 43, I guess. So yeah, that's what I want to do again. I want to do it again.
I love it. And so why, just curious now, why do you say the end of 24 versus, I
Because
mean,
it doesn't
what's the
have it
timeline?
doesn't happen as fast as we want.
Okay.
There are multifamily and office operators who are in financial stress today. Absolutely. They're going to try to do extend and pretend. They're going to try to, do loan workouts. They're going to try to do all these things. And at some point, it just goes, we gave up. We can't do anything. It just takes more time than we want. That's what I'm thinking.
And let's go back to something again. I don't know why I'm so fascinated with this. Had another conversation with a guy who was came up in the 80s, 87. He remembers the SNL
Mhm.
crisis. He had actually knew people, he bought deals, put together deals, 20 cents on the dollar kind of
Mhm.
stuff. Um, do you see in 2024, 25 that kind of, do you see it potentially creating some kind of a liquidity, some kind of, again, stressor on the banking system, what we started to see in the beginning of
Yeah.
this year?
I don't know how it couldn't. I don't know how it couldn't. I think it'll be different, right? A lot of the liquidity problems were actually created by the 10-year and bonds. But I think there's plenty of problems with mark to market on commercial loans. And I don't see the Fed going in and saying, I'll value your commercial loans 100 cents on the dollar, which is what they did with the 10-year. Could they? Sure. Will they? I hope not, because a lot of these loans are not worth 50 cents on the dollar. And I don't want us, the taxpayers, playing with those. So yeah, I think there's more pain in the banking sector. I think there's
Okay.
insolvent banks who will get taken over, like First Republic going to JP Morgan. There'll be some of those shotgun marriages. But I think a replay of the S&L crisis where we lost thousands of banks is probably unlikely at this point,
Okay.
given bank term funding and things of that nature.
Got it. Okay. Very interesting. Just any other thoughts on opportunities for the community as we go into 2024, or even just, do the work has always been a mantra, but just anything specifically that people should prepare for in 2024, just thoughts, parting thoughts on today's show.
I'm more excited about 24 than 23. 23 was going to be a rough year. I knew a lot of people that got hurt. I think they'd right-sized their business. They got smaller. I look forward to the opportunities in 2024. So I'm excited. I'm more excited about 24 than I was 23.
Yeah, I am too. What's interesting is I've got to say, I was thinking this morning of all the things. I'm very grateful that, doing this show with you. And I think for a viewer, if you've really been watching this for a while, not just because Michael tells us what he thinks and what's going to happen next, but I think if you really, look at the key indicators, CPI, PPI, employment, you're looking at all the data points that come out every month, you should by now be developing your own ability to see
Yep.
what's going to happen, not immediately and not like a crystal ball, but has some sense of direction and trend. And so
Yep.
I'm incredibly thankful for that, Michael, because I am learning and I actually understand, not thoroughly like an expert, but I'm understanding what we're talking about and the direction that we're going. So I'm incredibly grateful for that. Parting words, the event in February, are there more virtual tickets?
Absolutely. We got some more virtual tickets. They're only $99. You will get the ability to watch all 21 speakers. I've published the agenda so you can know what time to show up. You also get the video after the fact so you can watch it on replay. Yeah, for $99 you could not get access to these folks, let alone one of them, let alone 21. So buy the tickets, join. Should be a lot of fun.
OneRentalAtAtime.com. Happy New Year, Michael Zuber. Thank you all for watching. Subscribe. Thank you, Michael. Take care.
Got it.
Bye-bye.